What's up, guys? Today I'm going to be giving a bit of an educational video. I've got so many people who message me asking how they can become a trader and how they can start getting involved with it and all of this. So it's gotten to a point where there's too many messages for me to try and explain to everyone individually, so I decided why not make like short lessons on it, if I could say. So now it's time to see who's actually serious enough to take the time to go and learn this and start getting involved in it, because I'm going to give you the fundamentals that you need to start doing it. So let's get into this. We'll start off with the basics. So basically the first thing you're going to need to learn as a trader is technical analysis. What technical analysis is it helps you predict where you're going to buy into the share at the cheapest and where you're going to sell out of the share at its highest. Now you get people who say they're traders who have an app on their phone where they click buy and sell constantly, but ask them what's determining when they're buying and when they're selling, and they're going to say no, they just say when it's up they sell and when it's down they buy. That's not trading, that's gambling in my opinion, and I don't like gambling because I lose a lot of money to gambling. So let's start. We'll start with a chart I posted on TradingView. So now if you want to trade shares or cryptocurrencies, whatever it is, you're going to have to find a third-party platform where you can view these charts to actually chart. So now this is up to you. I'd suggest TradingView. I use TradingView and I'll show you how you can use it now. So 9 hours ago, you can see over here 9 hours, I posted this chart over here. Let's open it up. So I predicted with my technical analysis, so it's these pink lines and blue lines, that's my technical analysis, and these three things here are called indicators. So basically I determined now, okay, the falling wedge broke out, so we're going to uptrend, we're going to go up in the market. What the falling wedge is, it's these two pink lines here, resistance line on the top and a support line on the bottom. Now if I click the play button here, it's going to show us how this played out over those 9 hours now. So let's see, you'll see. So there's my technical analysis proven correct. So we broke out through the resistance. Resistance is a spot we need to get through to go higher. Then we had our blue line as our second resistance. Broke through that, so then our next stop was the next blue line, which we've broken through. So I'm predicting we're going to reach all the way up till our third blue line over here. So as you can see from where I've entered the trade, I've already got a safe 18%, because now if the price drops back down to this blue line, I'm going to sell out and take my 18% and walk away. Or I can get an additional 25%, and this is now only 9 hours so far. And I'm already up over 18%, which is decent. So your bank gives you fucking 7% a year. Come on. So let's see how we can get involved with this. How you can learn how to draw these magical lines. So this is the Litecoin chart that we just looked at. I want to open a fresh new chart that we haven't even looked at, just to draw some technical analysis on with you guys. What share can we use? Let's use power. So here's your search bar for your shares, just by the way, guys. You can see here's all the different shares. Mine's allocated to cryptocurrencies because I trade that, but here's Forex. You can use Forex. Literally all of them are listed here. So you just search over here. We do in power in this example. I've already got a chart for this. Okay, no, different chart. What haven't I looked at for a while? Ethereum. You can look into Ethereum. I'm sure some of you have already heard of Ethereum by now. Let's check out Ethereum. So basically, let's see what is this chart. What do things on this chart mean? What are these red and green things that people call candles? So look here. Zoom in on this a bit. Okay. So over here our share name's displayed. Then we've got a 4H here. This stands for 4 hours. I can change this. We're going to put it on hourly for this example. And now what hourly means is each one of these green and red things, which we refer to as candles, that's 1 hour of trade time. So here's our price on the right hand side, and then each candle represents 1 hour. So now if the candle is red, let's use this one for an example. Then we look at the previous one. It closed up here. As you can see, it started right there. Then it's got like this hair behind it. That means within this hour, the price went up to that price at one stage. And then you see the hair comes all the way down. That means it also reached all the way to the bottom of that price within this hour. But it ended up closing here, where the body, as we call it, is. So started where the previous one closed, went up, went down, came up a bit and closed there. Next candle started. Same thing applies. In that hour it reached there, in that hour it reached there, but it ended up closing there. Continue to the next candle, the next candle, the next candle. If you don't understand that, replay it again and just listen over it again and make sure you understand it correctly. This is an indicator. You need to go out and learn about your own indicators and decide which ones you want to use and which ones work with you, because after all, the only way you actually get good at playing the markets is from having a lot of time in them. So I recommend when you do start, you start with a little bit amount of money, because 90% of the time, if not higher, you're going to lose your money when you first start. I lost money when I first started, but truly the only way to become good at trading is to spend a lot of time in the market and get your own kind of feel for it. That's how you're going to, it's something that can't just be taught over to someone who doesn't want to spend the time in the market. Literally, you'll never be good at it if you don't put time into it and just carry on doing it. Even when you feel useless at it, just carry on doing it. Okay. So let's go back a bit and see what we can do for some technical analysis. We're going to do really basics today. Indicators, RSI. This basically determines to me, as you can see, it's got this purple section here. If it goes under that purple section, it means it's oversold, which means the reason for the price getting that low is that a lot of people were selling the shares at a much more rapid pace than usually. Same thing applies for if it goes over the purple line. That means the price would have gone up because the shares being bought very quickly. So that can be really unhealthy, and you can expect a market to start coming back down a bit. Doesn't mean it's going to come back down all the way, but just a healthy little correction like over here, and then carries on uptrending kind of thing. So that's what that indicator does. Then my MACD determines different volumes to me. And basically what this does is, you can see there's a center line here. If my blue line breaks my orange line and starts uptrending, I'm looking at a reversal in the market, so opposite direction. If my blue line breaks my orange line going downwards, I'm starting to expect a downwards movement in the market, set off of my settings. So as you can see right there, where the blue line did break below the orange line over here, our market has downtrended since, and we can maybe look for opportunity that it's going to start reversing back upwards now, and it's because it's broken back up the opposite way. But guys, you can't use one indicator that shows a good sign and say, okay, the trade's going to go that direction. You sort of need to have multiple hits, if I can say. So both my indicators must give me a good signal, and my technical analysis needs to look good to me. So let's start with the actual drawing on the charts now, the technical analysis. We're going to start with the two most basic things. It's support and it's resistance. So what support is it's exactly what it says it is. It's where the price reaches and it sort of bounces back up. It's where it struggles to go below. And resistance is where it reaches a point where it really struggles to get above and then comes back down. But if now we break resistance, we're going to go up further to the next resistance. But if we break support, we're going to come back lower down to the next support line. It's literally that basic and simple. Now, support and resistance lines can go horizontally or vertically. So here for an example, let's see if we can get one here. Remember guys, I'm drawing this on completely random charts now, trying to find some spots. So there we go. Here's a resisting line. We can see it out clearly with our eye. So now guys, technical analysis is actually really accurate, but don't expect it to be 100% to the T. Give yourself a tolerance of maybe 1% or 2% on your lines that you draw. So now this is going to be my first resistance line. Now you want to know how you determine a resistance line. So when the market starts dropping over here, you will not be able to draw this resistance line as of yet. You'll have to follow the market for a while. And basically, what most people work off of is a minimum of 3 hits on a line for it to be valid, which is how I do it. I work off of 3 hits on a line and it's valid. So what that means is here, I've got it, the market touching over here. It touches the resistance again here. It touched the resistance again there. It just missed it, so that's where that 1% tolerance comes in. Over here, it touches it again. So there I would have had 1, 2, 3 hits there. Would have had been able to draw on my line back then and follow it down for when it breaks it to start uptrending. Then we would have been able to buy in the market here, buy it on the breakout, and we would have had the opportunity to go for a 33% trade in what's this is hourly. So that's maybe one day there that you would have made 33%. So that would have been our resistance line. Now let's find support. Okay, let's see if we can run further into this chart. Can we get any support here? Here we can build ourselves a support. Now guys, remember it's much easier to do technical analysis on a chart in the past, but I'm doing this for educational purposes to teach you guys. So now how would we have known when it's time to sell out of this chart? So we broke our resistance line, started uptrending, and straight away after our first bounce here, what we would first then have to do is we would say, okay, this is now a potential support line. Which, oh my word, look at that, how it plays out. So we have our first dip and then bounce. So we say, okay, that's where our first support's going to be. We put a line, then we mark it. Market went back up, came down, bounced off the exact same support line. Now that we have the bounce there and the start of the uptrend here, we would have been able to draw this pink support line over here. So now we've got pink support and we've got blue support. The market carries on uptrending, hits our support line, bounces, so we stay in the market, comes back down and tests that support line again, then it breaks support, so it falls down to the next support line. So now we ask ourselves, where is the next support line? The one that we just drew there, the blue one, as you can see, it's come back down, it's bounced off there, it's come down, it's bounced on it, and now it's starting to go up again. So then now if we wanted to carry on playing this market now, we'd say, okay, where's our next possible resistance points? Well, this could be a possible resistance point. So it's one, as remember guys, I need 3 hits for it to be valid, but now we're playing in a market where we don't know where the price is going. So there's my possible support line. Now here's one that comes very valid to me. So if I put this line over here, this resistance line, now why it's way more valid to me is because over there it's resistance. So now if you break resistance, your resistance becomes support because you're on top of it now instead of underneath it. So then you can see over here, a 1% margin, that's valid. A 1% margin, that's valid. Came through, broke down onto our support. Now we're going up. You can see the price moving live here. We might even be able to, at the end of this video, I'll add a screenshot in of where this price ended up going. So then break through this support. Here's our next support. If we break through this support, then we carry on. Where's our next one? That's pretty strong. There's one where we've got 2 hits on it, so we could look to make the third one out of this. And yeah, this is the really basics of trading. So lesson number 1, support and resistance, and my 2 indicators, RSI and MACD. So I'm going to put 2 links in the description, one which will give you guys a really nice understanding of what the RSI indicator is and what the MACD indicator is, And then I'll also put a link to TradingView in the description so you guys can sign up. I know they've got, I think it's a 60-day or 30-day trial that you can do, and you can start drawing on these charts for fun. As well as I'll have a link in the description of some technical analysis courses that I used to learn, because I self-studied it all after hours when I was working still. So I'll do that for you guys, and yeah, let's see if you guys respond well to this and you actually want to learn more about this and go deeper into this and know how to do it properly. By all means, I'll make more videos and get into more detail and more technical. So I look forward to see your guys' response. After all, this is what you guys have been asking me for, so now I'm giving it to you. And just by the way, it is now 2:30 in the morning, but that's what you got to do if you want to live well, isn't it? So hope you guys enjoy this, and sweet.